Welcome back to our channel. So last week Tesla was one of the most discussed topics. In this video, let's talk about our valuation on Tesla and why we feel 40% of the current share price is solely based on speculative assumptions. If you're a Tesla fan, don't worry, this is not a negative video. Please watch the full video and let me know your thoughts at the comment section below. Alright, so Tesla shares were down 24% in the past month and currently sitting at $190. So historically, we have never really been bullish on the stock. 2 years ago, back in April 2022, we published a report when shares were at $355. We stated in the report that we expected a 40% downside potential. Shares did fall and has fallen 45% since our report. I feel 5 factors contributed to the recent decline in share price. Number 1, in Q4 2023, Tesla's revenue and earnings missed market expectations, and that was driven by price cuts initiated by Tesla last year. Number 2, China's BYD has overtaken Tesla as the largest EV manufacturer in the world. In Q4 2023, BYD sold more than 500,000 vehicles. That's 9% more than what Tesla sold. Number 3, rising complaints regarding charging and battery-related issues and signs of cooling demand for EVs. As an example, car rental company Hertz recently stated that they're selling 20,000 of their EVs. That's about a third of their EV fleet. Now, these are strong signals that mass adoptions of EVs could take longer than expected. Number 4, reduction in tax incentives. Starting this month, fewer models are qualified for tax incentives. And number 5, rising competition. In a recent earnings call, Musk stated that Chinese EV manufacturers could potentially demolish their global rivals, and he also stated that Tesla's revenue growth this year would be slower than last year. Bottom line, with no upcoming catalysts, we feel that these 5 factors should continue to put downward pressure on Tesla's stock in the coming months. With that, let's take a look at Tesla's positioning in the auto sector and compare it with other large auto manufacturers. In 2023, EVs accounted for 15% of global auto sales, up from less than 5% 3 years ago. And in 2023, Tesla sold 1.8 million vehicles. That's 2% of global auto sales, or 13% of global EV sales. To put things in perspective, Toyota, the largest automaker, sold more than 10 million vehicles. That's 12% of global auto sales compared to Tesla's 2%. In terms of revenue, Tesla is the 8th largest automaker, as you can see from the chart here. But Tesla's enterprise value is 40% higher than Toyota, even though Toyota generates 3 times more revenue than Tesla. When it comes to valuation metrics, Tesla shares are trading at a 450% premium over the sector PE or enterprise value to revenue ratios of comparable companies. We believe Tesla's high valuation is fueled by 2 factors. Number 1, the growth potential of its auto business, and number 2, the potential value of its early stage tech business, which includes initiatives such as AI, robotics, data collection, or robotaxis. With that, let's try to estimate the value of Tesla's auto business. Now, the consensus estimate is that global EV sales will account for 40% of auto sales by 2030, up from 15% currently. Now, assuming Tesla's market share remains steady at 13%, our models returned a fair value of $104 for Tesla stock. And as you can see in the chart here, our valuation ranges between $40 and $238 if we change the market share assumption from 5% to 30%. We believe it will be extremely challenging for Tesla to increase its market share, given that the sector is highly competitive. Tesla has been losing its first mover advantage, and the fact that most of the legacy automakers with long track records have been investing heavily in EV initiatives. So our base case valuation of $104 per share for Tesla stock suggests that the market is valuing the pre-revenue early stage tech business at $90 per share, or $270 billion US. That, for me, is a risky value proposition. For comparison, the total value of Volkswagen, which is the largest automaker by revenue, is $275 billion. So I feel it's a very optimistic and aggressive approach to assign similar values to Volkswagen and Tesla's tech stock. Bottom line, I feel 40% of the stock price of Tesla is backed solely by speculative assumptions, and that the stock should not be a choice if you have a low risk tolerance. That's what I have for you today. As always, if you like what we do, please support us, subscribe to our channel, like and share this video. Thanks for watching. I'll be back with you next week with more ideas.